Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Spencer Hilligoss, and Spencer is a passive real estate investor, an active syndicator, and an executive leader for two real estate businesses. His own company, Massing Investing, has co-sponsored deals totaling more than 3,000 units for more than $328 million. He passively invests in multifamily and now also helps other investors get involved in multifamily syndications. He's a technology leader with a 13-year track record of building high-performance teams across 5 companies, and 3 of which are valued at more than $1 billion. So thank you so much for being on the show.
Yeah, thanks so much, Charles. Really excited to be here and talk to you.
Yeah, no, it's awesome. So I briefly spoke about your professional experience. Can you expand a little bit more on your background prior to starting your current real estate business?
Yeah, happy to. So I'm actually based out here in the Bay Area. You know, the local business, as you want to call it, that is technology. It's software companies often. So that has been my background for the last 13 years. Truth be told, I actually grew up in a real estate household as well. My dad was a broker, so my earliest exposure was when probably 6 years old or something crazy like that. But more recently, starting in around 2016, early 2016. The 5th of 5 companies that I've spent my time in technology, building teams, leading organizations, it was actually a real estate tech company. And so that's how I found my way into this wonderful world from a real estate investing perspective. Despite the fact that, far back in the day, I was asked to do things like open houses for, multi-million-dollar houses, but to support my dad's business, even as a teenager, he was making me do that kind of stuff. So it's not my first foray into real estate, but we now are passively investing. And I have been doing that on the side for the past few years, as well as building our own business actively. But I'm happy to report as recently as this week, the cool update, even since we've booked the time together, is that I put my time in, or I put my notice in for my tech career to my employer this week. So
nice.
The big update is, finally pulling the ripcord or, making the leap, whatever metaphors that people want to use. So I'll be going full time into just running our own business, Madison Investing.
So you're building everything part-time up into this week?
Correct. Yeah, wow. It's been a labor of love. It's not easy, but nights and weekends, a lot of sacrifice, giving up hobbies that, I used to love my Xbox. I used to be able to play a little bit more guitar. Besides being able to play Wheels on the Bus for my 2 young kids, I don't exactly play a lot of guitar beyond that these days. But it's basically been nights and weekends, and then eking out time between meetings, working at my day job. And of course, to remind folks, like it is a real estate tech company where we target and work with real estate investors. So granted, we can go more into that if we have time, Charles, but that's been more focused on flippers and they're a different side of real estate than I currently focus on in our own business.
Is that one of the businesses that's valued over $1 billion that you were putting teams together for? The flip?
Well, yeah. Oh, great question. It actually is. Yeah. And so there's that, just to go into that journey for a bit. I never in my life thought I would be in a sales leadership role, let alone a sales role within the tech world. I mean, I started off as a guy who was studying computer science back in high school. And so going into college and then going out of college, I found myself just stumbling into, hey, let's go try a sales role. And then going through 5 different companies, 3 of which hit that $1 billion, kind of buzzwordy, kind of sexy sounding unicorn label. You end up just realizing certain things that you didn't realize that you would love in the first place. So Lending Home is one of those companies. The prior 2 companies are not exactly the kind of thing that most people wake up in the morning and get excited about. I think it's exciting to work on unsexy problems, but they're real problems. Like here's an example of the last 2 companies. One of them was Gusto. So Gusto, great company. I learned so much there. They're on a wonderful trajectory. that is definitely a unicorn. And I don't know what the exact valuation is now, but it's far over $1 billion. So it's, that was a payroll for small businesses company, payroll and HR. And so the other companies before that was, accounting software for small businesses. So these are the things most people don't wake up in the morning excited about. But the cool thing is you build that acumen, you build those skills over time, and you make great connections with people in the small business world, because real estate investors are very much small business owners as well, just like all the rest.
Yeah, the team building is definitely a great asset to have experience in when starting your own business, and when also putting together a real estate team where there's so many people that are required just to whatever you're doing. If you're flipping properties, if you're buying and holding, whatever it might be, you need so many different people to facilitate a property. Now, your dad started off as your commercial broker. That's how you're in with your real estate business, which is very transactional. How did you choose, and why did you choose real estate investing as a part-time, at that point, investment or venture?
Yeah, and if it's okay, Charles, I'd like to take you all the way back very briefly to that dad experience, because so my dad, back in the 90s, he actually got to the point where he was in residential, but he was one of the top residential brokers in the country. And so, he was grinding tirelessly, to build that business. And it was through that experience of kind of watching him and him putting me to work, like as a teenager, to go and work these open houses and glad hand, very affluent buyers. I didn't want to be there. Of course, I wanted to go hang out with my friends and be able to have fun. But I was seeping those learnings on entrepreneurship from him and about work ethic from him. But the reason I bring that up is because what guided me ultimately, if I look back, what guided me to real estate investing, starting with passive investing, was this learning that I took away from that era of my life. And the learning is that like we all have a choice on if we want to play financial defense and play financial offense. And as a person with, a family of my own with 2 young kids, a hardworking wife who's also my business partner, like I feel the obligation to play financial defense and offense as hard as I possibly can. And the reason I got those learnings was because my dad, shortly after building that business of his to a wonderful scale, and we had a comfortable lifestyle as a family growing up, we entered this period of time we call like the dark decade. Essentially, my younger brother, Justin, who was a early teen at the time, he was diagnosed, unfortunately, with pediatric cancer, and he had a brief, beautiful life, and he lost that battle. And as a result, what commonly happens in those cases is, parents get divorced. That's just common in those kinds of tragic situations. But there's massive financial fallout, because of medical costs, because of damage to the business when you lose momentum. So all that stuff, all that pain and all that exposure to what happens when you don't necessarily have passive income to fall back on, and when you're not working actively, those were the things that I was left with going out of college into the workforce, was watching that kind of financial devastation and all that pain, and realizing like, what are the answers to questions such as like, well, I got kids now. How do I avoid, dealing with a debilitating injury if I get hurt? How do I deal with the fact of, with major job loss? Like how do I protect my family against those kinds of things? And so those core principles, and the reason I wanted to share that was because I looking back, have carried that learning with me, and it fueled me. I didn't know it was going to be a passive investing in real estate strategy until I got to Lending Home, and stumbled my way in there. I was pointed towards it by one of my mentors in my corporate career. And I quickly found myself surrounded by these colleagues of mine that all had side hustles on the side, but they were flippers. And I had no interest in becoming a flipper, because a flipper is very much another active job. And I wasn't looking for another active job. I was just looking for a way to build wealth. I was looking for a way to protect my family. And I was looking for a way to be playing financial defense and playing financial offense as best I could. And I studied voraciously. I read at least 24 books. I listened to 400 plus podcasts, as I'm sure that you have devoured as well. And I did all that diligence. I even signed up for multiple coaching programs. And then I eventually found, like, just let's go take the leap. And we started investing in not multifamily first. We actually started investing in rentals, where most people start. Very common narrative. We bought a duplex locally, because we weren't ready for out of sight purchase. We weren't ready for long distance purchase. We went and got turnkey properties out of state once we got comfortable with that. And the last stage, which I wish we had gone straight to right out the gates, was we started investing passively in multifamily syndications. And that's our chosen passive strategies even now to this day. And now we help other people get into those as well. So it's been a wild journey, but that's kind of the core principles behind what brought me there.
What was the biggest benefit in starting to invest in real estate passively? Was it time? Was it the ability as the financial freedom and having another source of income, or multiple sources of income when you have multiple deals you're working on?
Yeah, this is fascinating. I don't think a lot of people necessarily make this connection, but for me, it resonates so much, and it was my experience. I wasn't originally planning, when I first started doing this, I wasn't planning on, eventually quitting my tech career to go full time. And what I had found as the key benefit right out the gates of doing a couple of these investments was you have a buffer, and if you live in a pricey market, we live in the Bay Area. If you live in other pricing markets, maybe you live in New York, even other markets such as Boston and others are actually getting quite pricey as well at this stage of the cycle. Like that relief of knowing I have enough passive income to at least cover my pricey Bay Area mortgage. It allows me to walk into the office and do even better work and be more focused with stronger perspective and less of that back of mind fear of what happens if I lose this job. So over time, it became clear to me there's something more here. Like this isn't just about like going and having more confidence in my day job. This is like a real strategy that you can compound over time. And all you need to do is just keep doing it and keep doing it. And as your investments snowball, and putting, $50,000 into a syndication, let's say, like every few quarters or couple quarters, and then it's going to come back to me in something like a 5-year period, hopefully, and hopefully it overperforms, and then I can go and roll it into others. So it's stuff like that where I'm like, wait a sec, like I got momentum here, and maybe this could become something else. And how come no one else knows about this stuff? How come I didn't know about this stuff earlier? Because the benefits are incredible. And also, man, I'm tired of getting taxed the way I've been taxed for the past 13 years. I give half of my income to the federal government, and I'm all about public services, but good Lord, I have paid so much in taxes, and I see how much people are not paying in taxes by getting into real estate investment. And I'm like, I would like that. I would like that as well.
And which compounds that too is you being in California. So you get an extra tax on top of that, not like what we have down here in Florida. So, but it's great about the passive investing because, when people want to create passive income and they might start with smaller properties, and I kind of don't discourage it, but it's also, do you want to learn the business and do more deals like actively, or do you just want passive income and you're busy with your other job? And if it's B, then it's something where it's much better to work with a group and you're just getting money, quarterly. You're getting a quarterly distribution to your account, and you're getting a monthly report, and maybe there's a quarterly, webinar or something, but it's totally hands off. And there's no one's calling you saying, hey, we need more money for the roof. We need more money here, because that was all taken care of initially. You know what I mean? That was all
completely. Yeah. And if I could make a quick comment on that one, Charles, I feel like there was this formative moment for Jennifer and I when we had invested locally. So we owned a duplex. We had a property manager on it. We also have a modest portfolio of turnkey properties that we bought in the Midwest. And I'm happy to report they are cash flowing. They're doing well. It's like $250 a door, and we're happy with the performance. But even with that said, like we still have the occasional property manager call, and frankly, it is not infrequent. So the headache was still there. So we looked at that strategy right before we got to investing passively in multifamily syndications, and we asked ourselves, like, wait a second, if we go down this road, let's say that we magically could wave a wand and suddenly have 100 properties all generating $250 in cash flow per month. Well, that income sounds great, but just run the numbers and say, how many phone calls are we still going to be having to deal with? Assuming that we're dealing with hopefully a limited number of property managers, we still had to manage the manager. And that is something that people don't often talk about in the turnkey discussions, is that I do think turnkey for example, is a fine strategy. I really do. I think that for people who can't quite make that mental leap and into multifamily and real estate syndications, because it's just, for all the reasons that they typically get scared of it, because bigger is a little scarier for people out the gates. I really encourage folks to at least just ask themselves what level of time commitment they want to put into it. Like I have my brother-in-law, for example, who's a pediatric oncologist. Like he is extraordinarily busy. He does not have time to even breathe on some days. He has multiple kids, many responsibilities. He doesn't want to have to pick up the phone and deal with that, which is why things like investing in real estate syndications, just like we do, is a great strategy match for him, because he doesn't want to take the time to do that phone call, for sure.
Yeah, the hassle you'll have if you're putting $50,000 in, which is traditionally the minimum for anybody listening, into a syndication, investing that in, and even if you are buying, maybe you buy a condo cash $100,000 or a house cash for $100,000 in the Midwest and you're renting it, when it gets down to that, like you said, $250, $300 a month is actually what you're netting, and it only takes one tenant, one eviction, one roof mishap, one issue with the HVAC system to wipe out a year plus of your gains. And then also you're the one that's now, if it's not local, you're the one now having to call someone, tell your property manager, hey, get someone over there. What happened? Did it get fixed? Did it not? So it's, and the turnkey is a great way of doing it. It's great for someone that wants to start actively investing. But also the other benefits, the other issues, I guess you would say, with turnkey, not, drawbacks, let's say, is that the value has already been created when you buy that property. So they've already done the flip. They've already found, they've done a lot of work for you and they can hand it over to you, but you're not going to see a huge appreciation right off the bat like you would if you flipped the place and you rented it out afterwards. So it's still a good strategy. It's great for someone that's starting and then they figure out exactly who do they need for their team, what issues I had, and how to avoid it for the next one, which is usually just by going larger. You know what I mean? But
right.
So what you made the switch from passive investing, larger properties, I imagine. What kind of properties were you passively invested into initially when you started?
Yeah, so once we graduated ourselves out of the residential properties and we had done the turnkey experience, we were looking for something more passive. We went into multifamily apartments, and we did that by networking like crazy. I was going to meetups. I was on biggerpockets.com, which I strongly encourage people to get on and just dig into those forums as much as you possibly can, because that's what I did. I found that invaluable because there's so many people out there that are willing to answer those questions and help guide you. You got to always, of course, have a discerning eye. This is the real world. You might interact with a person who seems like they're going to be very authentic with you, and maybe that won't be the case. But I have found the vast majority of real estate investors in this community, in the established ones, are great people, and they care about giving. And yes, they're there to run a business, but they're not there to take your money and screw you out of your money. So I went on those forums and I just started looking at and like trying to understand the perspectives and the track records of the people that were doing this and saying that they were looking for investors. So that's where I started. Around that time, I was also looking for a coach. I believe wholeheartedly in coaching. I have done it in my corporate career, hundreds and hundreds of hours. But I just believe that it's something that works well in this world to help people get better at skill development and in knowledge. So I was hiring a coach, and I interviewed about 7 or 8, maybe 8 coaches, like real estate coaches that were also established multifamily syndicators. And I was not necessarily going down the active path at that point. I was still trying to figure out like, who could I invest with? And so once I did that, I had killed 2 birds with 1 stone. Basically, I had made this connection with these great, brilliant, successful people that I would like to maintain a relationship with, regardless of whatever direction we go on the active side. Once we got there, but on the passive side, I could sit there and compare. I could say like, well, my communication style seems to jive really well with this individual. So that was how I found them. And, we started looking into markets such as Texas, and a couple like Alabama, a couple places that were not California, because the big mental leap that I think most of my brethren out here in the Bay Area, particularly in the tech community, which is ironic to me, they really struggled with the notion of doing sight unseen investment. And I did too. That's why we bought a local duplex and paid way too much for it, for $250 in cash flow per month, which we could have just as easily done in other ways in other markets. So that was kind of the journey that we found and followed to go get to our first kind of passive investments in multifamily.
One of the things I wanted to talk about is that what was some of the mistakes you made initially when you were actively investing, and you with the smaller properties? What are some of the mistakes you made, and what are the things you didn't expect to happen that ended up happening?
Yeah, I mean, I would have to come back to that duplex example, but I got to take it a layer deeper, because it really illustrates why it's important to understand your strategy. So many folks just jump into action, and that's very much what we did, as opposed to going and sitting down and like talking to, if you have a partner or hopefully have a sounding board or like a mentor of some sort, ask yourself, why are we doing with this? Why are we going to go invest in this thing, in real estate in general? And for us, we have a number that we're targeting. We have a passive income target of monthly income that we are wanting to hit. But we didn't have that number established yet when we went and bought a duplex. And that duplex cost $430,000, which is not exactly a bargain. And so, I'm happy to report, like, yes, there's a loan on it, of course, but also it is appreciating. So that's the first big bad learning. But I look back and I don't regret it, because it got us on base, as people say. It was our first investment, and it made us feel confident that we can go and take on the next challenge. But the learning there was, we didn't realize our chosen strategy was focused exclusively on cash flow. Like, a property that's going to appreciate, maybe that 430 goes up to 600, 700 over the many years, and we eventually sell it. That doesn't necessarily help us on our journey to go and build, up to maybe $10,000 a month in cash flow. We could have made that money on the end of that down payment go way further in generating thousands of dollars in monthly cash flow towards our target if we had just looked at that and set that goal first. And that's why goal setting is so critical. It's so tempting for people to say, oh, emotion, drive me. Take me to that first purchase. Let me go. I have capital. It's burning a hole in my pocket. Let me go put that into a property. But in reality, it's the most important thing to slow down and take the time. And my wife and I took 2 whole weekends up front after we had that realization. And we just did long-term planning. And there was some serious debate. And we got so much closer as a result of those discussions. But that was the big first mistake, I would say, is just not being clear on what we wanted out of it and setting a strategy.
Yeah, it's really having that goal of what you want. And sometimes people have an ultimate number, but really to get them started or get them, get them out of their job or something like this, the number is much lower than they kind of set as their ultimate, say, 10 or 15-year goal. And it's also focusing on it too, where the appreciation is great, but it's not going to, if your goal is $120,000 a year, that's not going to help with, it's great to have that money and hopefully it appreciates and stuff like this, but it's not helping your passive income at all. You know what I mean? Your passive income is still at $500 or $200 a month. You know what I mean?
Completely.
So, what markets are you focused on? You said Texas. What other markets are you guys focused on now? You're really bullish on.
Yeah, and I think at this stage of the cycle, and for your listeners, I assume, you have a pretty savvy audience, but I'll just, say, when I say the real estate cycle or the economic cycle, we've had a very strong growth for the past decade, basically. And that means you have to be more discerning. You can't just run out there and find a great deal. And there's more people than ever right now out there competing for these deals. So we focus on Texas still. And the reason I want to focus on that, and I'll give you other market references of where we have focus. So Alabama, Florida, so a state quite well, and the Carolinas. So we've been more focused on those recently. So Texas, Alabama, the Carolinas, and Florida. And we strike up partnerships with folks in those states, both from a passive investing perspective as well as our active work now. But the comment I wanted to make on the stage of the cycle we're at and how important it is to be more discerning is that I used to think, when I first got into this business, that when people said the market is good or the market is bad or the market's overheated or the market's past peak, I thought that meant like you could just throw blanket categorizations out there like that. So take Dallas-Fort Worth as an example. That is a huge geographical footprint. And I didn't, as a kind of a dummy Californian who wasn't initiated on this many years ago, having gone out there many times now and driven around that huge metro area that is Dallas, I can fully appreciate this learning that you have to look more closely. You have to look down to the submarket. And so, there's a couple submarkets, for example, even on a deal that we just worked on, where it is this wonderful apartment building that one of our partners found. And we worked on this deal with them. It is surrounded with growing employers that continue and have declared their continued investment in that area. And the workforce housing, in that apartment that we're going to focus on is the same match for that employer base, for that employee base. So you have these fundamentals that you can actually dig into and find publicly available data, to go and analyze these things. So I just wanted to call that out because there are certainly overheated markets, submarkets, and neighborhoods within Dallas for sure. But you can't just, condemn the entire area or praise an entire area. You've got to take it a layer deeper. So those are some of the markets and kind of how I think about them.
Yeah, the submarket is very important in how you mentioned the neighborhood, because that was something I was going to mention. Really, when you're buying, you're actively investing. You want to really drive and know those areas, and the brokers that you're dealing with, the commercial brokers you're dealing with, will appreciate that and know that you're a lot more serious, because you actually say, well, this is the street. These are the streets I want. These are the ones I don't. We purchased a 59 unit in North Tampa 3 months ago or so, and people were like, "Oh, the area is not the best." But the thing is that where we were was in the path of gentrification, and they're renovating a mall with $250 million. Mall's already vacant, and it's pretty much abuts on that property. So it's something where you have to get a little bit more creative in this part of the market. I think in this where we are now in the market cycle, as you mentioned, to find properties. It's not like where maybe 4 years ago, 5 years ago, you kind of just throw a dart and you're like, this is a good town, right? And I'm going to make money one way or another in this. It has to be, you have to have your criteria really mapped out, and you have to know exactly for the neighborhoods exactly. And that's really just knowing what you're investing into, and knowing, even if you're not local, if you're not local and you're not able to go to the town hall, reading everything that's on that property, reading what new development's going on, reading, where people are coming into, what ages they are that are moving into your area and stuff like that. So it's extremely important. Yeah.
Well, congratulations on that acquisition. That sounds great.
Yeah. Thank you. Yeah. It's awesome. Are you guys focused on the all multifamily, or have you ever invested passively or actively in any other asset classes within real estate, like self-storage or mobile home parks? Does that interest you at all, or you're?
Yeah, actually, very much so. And so we've done a couple self-storage investments. I love that asset class. I really am fascinated with mobile home parks, and I have reviewed actually dozens of deals in mobile home parks in manufactured housing communities. I think that is an asset class I want to go and study up on more. One of the things that matters a lot to me is that before I pull the trigger on an investment, or if we're going to go actively partner on one of these projects with someone based in another geo, and we're gonna do like self-storage, I studied up a lot on really understanding, like, how do you analyze that differently than multifamily? Because I do not feel comfortable going in and helping other people get involved in a syndication, for example, as part of the LP team, the limited partner team. I don't feel comfortable with having them jump in alongside us unless I can really understand that and speak to everything in great detail. And so, once I got to that point, I was really sold on self-storage. I think self-storage is great. I think it has tons of runway. You still have to be, with all those disclaimers that of course we've already talked about, be discerning. Make sure you have a great operator, make sure you have a great GP team on whatever project you might be investing in. But man, oh man, I would love to get more involved in mobile home parks, just because I've seen the financials, and I've also just talked to some of the best operators, what people consider the best operators in the country on these mobile home park projects that are more well known. And I look at that and I'm like, man, that is so wonderfully unsexy and extraordinarily profitable. So I would, long-winded answer, but self-storage, great. I'm already doing some, not as much as multifamily. Mobile home parks, would love to learn more and get more involved on that front.
Yeah, I was at a couple of conferences, and one I was at a couple of weeks ago, someone was telling me that there's only been one mobile home park, I think, built in the last year, which is crazy.
Wow.
And then I was at a self-storage conference, and they were saying that there was like 18 being built around DFW, Dallas-Fort Worth area, that were like in construction over the but that's, I mean, the self-storage can, if the population's coming in, the self-storage definitely will just fall right behind it, especially with renters. You know what I mean?
Yeah, there's some parity there, right? You have the parity between, like, they got to put their stuff somewhere. So
yeah, I had an expert on before that was a couple of shows back, David Thompson, and he was saying that I think it was 7 or 8 square feet per person in with whatever it is, so many miles of it is where they figure out if the demand, if there's more demand than there is, and it can actually, if a new building, a new complex can actually be rented out and be created there, which is very interesting, and how they have that they done so well and have it focused. But well, Spencer, well, thank you very much for being on the show. How can listeners learn more about you and your business and see what you got going on?
Yeah, and thanks so much for having me, Charles. It's been a blast. Folks can reach out to me directly if they'd like, and I encourage them to. Spencer at MadisonInvesting.com. That's my email address. Or they can go to our website, where we've got a lot of great info as well, and some educational resources and a mailing list. And so if folks want to just jump in and start learning, this is a no obligation thing. Anyone can join. They can go and join our mailing list at MadisonInvesting.com.
Okay. Well, that sounds great. I really appreciate you being on the show today. I'll put all those links and contact information in the notes section so you can easily find those. And let's look forward to catching up with you in the future, and have a great rest of your day.
Yeah, you too. Thanks so much for having me on, Charles. It's been a blast.
Thanks a lot. Hi, guys. This is Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in investing in real estate and you don't know where to begin, set up a free 15-minute strategy call with me at schedulecharles.com. That's schedulecharles.com.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.